Hey everyone, this is Joe Henches with Beyond the Chart, and in this short video, take a look at the Shanghai Composite here and see how it's doing lately, and then we're going to compare it to the Baltic Dry Index and see how they compare over the years and how one might be influencing the other. So stay tuned. All right, so right here, you can see the Shanghai Composite. It seems like it's consolidating a little bit down in here. Now, I wouldn't say that that's any kind of bullish activity. It's just kind of pushing sideways. When we drill in, when I can drill in a little bit, you can see that the support came in at 26.38 low, but back here in January 27th and again on February 29th. Now, the resistance coming in here in the cluster right in the center of this trading that occurred back here in mid-January, and so it provided that resistance here in late February, and I think it's going to provide the same thing here, or at least we're going to test it. And you can see the 55-day moving average is declining right in here. All right, now let's take a look at the Shanghai and the Baltic Dry Index. Now, I have talked about the Baltic Dry Index numerous times. If you go back to my November 23rd, 2015 post, I talk in great deal about the Baltic Dry Index. I talk about it again on January 6th of this year and January 30th. So this is a daily chart of the Baltic Dry Index. The index is on the left for the BDI, and the index for the Shanghai Composite, the scale, is on the right. Scale on the right for the Shanghai, scale on the left for the Baltic Dry Index. So the data on the Baltic goes all the way back to 1985. The all-time low on this was back in 1986, July 1986, of 553.5. That held until February of last year. Okay, when it broke down through that and shattered it and went to a 509 low in February 2015. Now, the interesting thing that when I look at this, you could see the Shanghai Composite skyrocketed when it first took off in here, pulled back, and then zigzagged its way upward. It almost looks like the Baltic Dry Index kind of leads a little bit in terms of breaking to new highs here, pulling back, and then eventually, if you drew a line across, it broke to dramatic new highs in here. Now, I don't know if you could actually say it's leading, or not. It all depends on your reference in here, but it looks like this move may have led this continued breakout in China here, and when you then see the consolidation of the back in through here, this breakout in here kind of signified, and then of course this breakout signified, this move right in here. And this was kind of more coincident with what it was doing. So it's really interesting to see that, the Baltic Dry Index kind of bottomed back in here in, was this 2001. We had a low 2008 to 2009 also. And it peaked in May of 2008, okay, when all the commodities were peaking at the same time. So, the interesting thing, the Baltic Dry Index is an indicator of the cost of shipping around the globe for moving major, of the very, very large ships, moving major dry goods, things like copper, nickel, coal, iron ore, aluminum, scrap metal, all of these types of things. I believe it includes grain also. So these are the kinds of things that it's moving, and you could see as the demand increases, the Baltic Dry Index, in terms of the price of that shipping, just kept, getting higher and higher and higher. And so now with this huge collapse that occurred 2008, it's just not recovered. It had a dramatic recovery, bounce back 2009, 2010. Then the bounces just kept getting smaller and smaller until it broke through the floor here. And I honestly think that this is kind of a leading indicator. Now, I know they built a lot more ships in here, and some people will say, well, there's an excess supply of ships. Well, that's probably true. I just find it hard to believe that an excess supply of ships is accounting for the fact that the cost of shipping has now broken to new all-time lows, and that it keeps breaking lower and lower. The other thing that I find really, really interesting is that here we have the break to a new low, new all-time low in February 2015. And then what does the Shanghai Composite do? It peaks in June of 2015. And then the Chinese government in August is devaluing the yuan, trying to encourage domestic demand and stimulate the economy, right when the Baltic Dry Index is collapsing again. Back from, Baltic Dry Index classic right here in August, it's doing it, collapsing down, breaking to new lows. And then here we have it. And then the same thing happened again with devaluing in January of 2016. And here we are breaking to new all-time lows at 290. I mean, it's just like numbers, nobody would ever believe that we'd get this low. 290 when back in May of 2008, we're talking about 10,220 was the rate. And now we're at 290. I mean, it's just unbelievable. And so when you look at this kind of breakdown and the mere fact that, according to Goldman Sachs, in 2015, and this, the percent, China's consumption accounted for 49% of the entire production in the world of copper, 50% of the entire production in the world of nickel, 53% of thermal coal, 55% of aluminum, and 60% of iron ore. So when you have one source, China, that commands the consumption of that degree of production out of these key dry goods that are being shipped, and China is slowing down and slowing down and slowing down. And we're talking about growth in China that is at 25-year lows in terms of growth. Now, they're not declining, they're still growing, but the rate of growth is at 25-year lows, okay? I find it hard to believe that this Shanghai Composite is going to stay above this trend line here when you have the Baltic Dry Index collapsing to lows like this, because I think this is a leading indicator and a canary in the coal mine that's telling you what's really happening with the global economy and the shipment of goods, and everything else has got to catch up with that, because this, I think, is reality, and this is people adjusting to reality. And governments can mess with economic statistics and in the things that get published, but these kinds of things, the reason I put a little more weight into something like this is because this is put out by, it's not a government entity, it's a separate entity, the London Baltic Exchange. So anyway, I find this really, really interesting. Let's keep an eye on it. Let's see if it's, what this continues to do. I find it hard to believe that it's going to go lower, but of course, probably would have said that here and probably would have said that back in here. So anyway, I hope you found that helpful, interesting comparison, and it's going to be interesting to see, watching the Shanghai Composite, to see if it does indeed break this trend line here. That's from the bottom of 2008 and through the lows here in 2013, 2014. All right, everyone, we'll see you on the next video. Thanks for watching, and share the video.